Hello and welcome to the Daily Aus. I'm Sam. The Australian dollar has hit a 5-year low of 61.84 US cents this week. It's a level last seen during the early stages of the COVID pandemic. With Donald Trump's move into the White House and the potential for harsh tariffs on Australia's major trading partner, China, only a few weeks away, the currency plunge has sparked fears amongst Australian commentators, some politicians, and financial experts. But what does a dropped Aussie dollar actually mean for us? Not just when we're planning a trip overseas, but in day-to-day life. Why is it happening now? Is there real reason to panic? To find those answers, I'm joined today by the Australia Institute's Greg Jericho. Greg, thank you so much for joining us again in 2025 here on the Daily Aus. How's your summer?
It was really good. Lots of sitting on the couch watching cricket, so a very nice, easy summer.
Yeah, and the couch is probably where you're going to stay because none of us are doing much traveling in the year ahead because of this Aussie dollar, and that's what I want to talk to you about today. I want to read you some headlines. So we've got how the falling Aussie dollar could hit you hard, Aussie dollar under pressure, Australian dollar weakens to lowest rates since COVID. Break this all down for me.
Yeah, basically what this is all about is a bit of a kerfuffle, I guess, regarding exchange rates and the international economy. And it can get kind of confusing for people, especially when you see headlines almost suggesting that we should be panicking about the falling Australian dollar. And you think, geez, do I have to go and buy canned goods again and go through the whole COVID crisis all over again? And to be honest, I think it's a little bit overblown.
Okay.
But so let's see if we can sort of work through what's actually going on here a bit.
So break down for me what the top line factors are that would make a currency drop, like the Aussie dollar drop over the last couple of months.
Yeah, I mean, what you have to think about with the Australian dollar is why are people buying or selling it? And
Right.
really the main reason you want to buy Australian dollars is because you're buying stuff from Australia, or you think the Australian dollar is a good bet because the economy is going well and you think that maybe the value of the currency is going to rise. And while that is a primary factor, the reality is while we're a fairly large economy compared to America and China, we're quite small. And when they start sort of mucking about, we get caught up in the wash. And that's really what we've seen here, because there's a couple of things at play. One, China's economy is struggling a bit. And so as a result, they're not buying as much stuff, or their demand for the stuff that they get from us, mainly iron ore, isn't as great as it once was. And sort of the Australian dollar is viewed by investors a bit of a proxy for the price of iron ore and also how well China is doing, because generally we know if China's doing well, Australia does well. So we've got that in place. So also what we've got is America actually doing kind of okay, which certainly Kamala Harris and Joe Biden have been trying to tell everyone that actually the American economy is doing well. That didn't quite cut through during the election, but basically it's doing well. But then you also throw in Donald Trump. And Donald Trump is promising to raise tariffs on everything coming into America, and especially imports from China. And what that means is everyone's thinking, oh, God, China's already struggling a bit. Is this going to hurt China even more? And as a result, the Chinese currency has become weaker compared to America. And basically, we've just been caught up in that. That's really what it is. It's got very little to do with Australia. It's all about China being weak, America kind of attacking China with tariffs, and we caught up in the wash.
Why do you think commentators, journalists go to that level of panic language with something like this? Like, what are the consequences of a weak Australian dollar?
Yeah, it's always a bit perplexing to me. Well, not perplexing, given I have worked in media for a long time, so I know there's always clicks with
always a bit of
headline
panic
that is all scary. Scare quotes work well. But one of the things about an exchange rate is it's neither good nor bad. Now, certainly if you're thinking of traveling overseas, it's bad because essentially if you think of it in dollar terms, let's
Yeah.
think of it.
You're booking a $100 a night room at a hostel in New York. That $100 is going to cost you more Aussie dollars.
Yep, yep.
Got it.
So basically, I mean, the classic when I last went over to America a long time ago in the winter of 2001, the Aussie dollar was worth 50 US cents. So
Yeah.
that meant basically I was paying double everything. If it was $1 US, that was costing me $2 Australian. So very
Mm.
expensive. So when the Aussie dollar falls, as it kind of has, it's gone from about 65 cents to about 62 US cents. That
Yeah.
means everything is a bit more expensive. So that's not good for people who are thinking of traveling. But let's be honest, that's not a big impact on our economy, and we don't really care if people are going to travel. It'd be better for our economy if they stayed home and traveled to Queensland
Interesting.
or wherever.
Yep.
Where it really hurts us is, think of it in terms of us buying stuff. So yes, that accommodation in America is now more expensive, but let's say we were, instead of buying a hotel room in America, we're buying, say, a book, or we're buying, say, an electrical good from America.
Yeah.
With a low or a falling exchange rate, that makes those imports more expensive. And where we really get hit by this is, of course, when it comes to petrol prices, because petrol
Got it.
prices are all imported. Essentially, we're importing our oil, and it's all dependent on the world price of oil. And so when our Australian dollar gets weaker, all other things being equal, we pay more for petrol, and that, of course,
Mm.
means our inflation generally goes up a bit. So that certainly hurts us, and not a good news during a cost of living crisis where we're already feeling the pinch. And so that's where the main scare is coming from. And you might think, okay,
Right.
so it's all bad news. Well, yes and no, because now let's flip the whole thing. Let's
Yeah.
say
Who
we
benefits? Who
are,
benefits from a weak
yeah,
currency?
let's say you're a company who is exporting to America.
Mm.
Suddenly, it's actually cheaper to buy stuff from Australia. So if you're exporting, you're actually benefiting from that because your companies over in America can buy more of your stuff for basically the same price. And so it actually helps the economy that way. So we get hurt by higher imports, we get helped by lower prices for our exports. We still get paid in Australian dollars, so it's all good for us. So it's very much the swings and roundabouts, but certainly most of the panic is a little bit in sort of the Donald Trump Joker card of not really knowing, is he going to follow through and slap a 60% tariff on everything coming from China? If he does that, that could really wreak some havoc,
Yeah.
and we might see the dollar start going below 60 US cents. But as is always the case with Donald Trump, who the hell
Who
knows really
knows?
what he's going to do?
Well, I find it really interesting how in the economy, and I've kind of picked this up through a couple of conversations with you over the last year or so, there tends to be a little bit of speculation being built into the prices of stuff. So, China's currency might be coming down because of the potential of Donald Trump being someone in favor of tariffs. Those actually haven't happened yet, but it's almost like they're getting ready for that. It's funny how then sometimes the drop when he actually does introduce the tariff might not be as big as we think.
Yeah, absolutely right. And certainly if he doesn't raise tariffs to 60%, then we might see the dollar go back up because kind of people go, oh, it's not as bad as we feared. So it's all
Yeah.
good. And yeah, you're very much right. A lot of the market investors, they're all trying to anticipate what's going to happen because that's kind of how you make money. You can't make money investing on things that have happened because everyone's already factored that in. And also, there's been a lot of commentary about interest rates. I'm not as convinced by some that who are suggesting that this sort of small fall at the moment in the Aussie dollar might put off an interest rate rise. I think that would be a little bit silly on behalf of the Reserve Bank. It's not going to have a big impact either way on the value of the currency. So if the cost of petrol goes up because of our exchange rate, well, raising interest rates or keeping interest rates the same isn't going to affect that all that much. There's not much they're going to be able to do to affect the impact when we're talking America and China. Investors know who's the big dogs in that game, and it's certainly not Australia.
Last question from me, Greg. In this journey that you and I are going on, building the economic literacy and knowledge, and understanding how all of this plays into the news, what's your advice on how closely we should all be paying attention to currencies? Is it something we should be checking every week? I mean, is this something that should be part of our financial diet?
Hello, Billy here from TDA. We have just looked at our YouTube analytics and 95% of you who are watching our videos aren't subscribing. If you want to help independent media like us grow, the best way you can do that is by pressing subscribe. Thank you so much, and back to the video.
Look, I would actually say no, not really. I mean, To be honest, I don't check it a lot. And I write about this stuff. I mean, and it's always struck me as a little bit weird that it is in the news every night. We see the value of the Aussie dollar and it's like, okay, is that good? Is it gone up? It's important if you are traveling. It makes a big impact on how much you're going to be able to spend when you go overseas. Going to UK at the moment, it is basically you're getting half,
almost double
the dollar, and so that is, I guess, important. But if you're not traveling and if you're not an importer and exporter, it's kind of not really all that important. It's not going to have a major impact unless there is a massive plunge one way or the other. I mean,
what's massive? Is massive like if it gets to 50 cents?
And if it plunges like 5 to 10 cents in a week, that's where you start thinking, oh gosh, there's something wrong afoot, and there might have to be impacts. Some people might be able to recall about a decade or so when we reached parity with the US dollar.
Yes.
And it was great. Everyone was getting on Amazon and buying books and shopping and thinking this is fantastic. Meanwhile, this was horrible for Australia's economy because our exporters, especially manufacturing, really suffered because it was very expensive to export Australian cars and things like that. And it really hurt. So while we were all laughing and thinking this is great and having a parity party, businesses, and certainly I know Wayne Swan as the treasurer was thinking this is terrible. So it's always, I think, a bit of a warning not to get too caught up in the daily movements and think, oh, God, it went up, 0.25 a cent. Is that a matter? Should I get really concerned? I don't think so. I think worry more about things like, the unemployment rates and just your own sort of cost of living and looking at what's happening with petrol prices and interest rates rather than the minutiae of exchange rates, which there's often so many moving parts that it's really hard to discern why it went up one day and why it went down the other. You kind of just want to look more at the trends and unless there is a real sort of weirdness happening, I don't think people need to which I'm sure they're not, watching the 6 p.m. news. I don't know what watches the 6 p.m. news, but certainly there's no need to be looking at the currency market fluctuations unless you happen to be about to go off for a nice holiday.
Greg Jericho from the Australia Institute, thank you for getting off the couch and pausing the cricket to have a chat with me today. Really appreciate you going beyond those headlines and talking us through what this all means.
No worries, Sam. Really good to chat.
It's always such a pleasure to be joined by such a level-headed economic commentator. That's all I've got time for the Daily Aus today, though. We'll be back again with some headlines in the afternoon. Until then, have a fantastic hump day, and we'll speak to you later.